what schools never taught you about money, power, and building empires. At EiQS, we decode the hidden playbooks of billionaires, tech giants, and financial masterminds so you can stop surviving and start dominating. EiQS, where money meets mastery. Learn what the rich already know. Imagine waking up one morning and realizing you've made $10 million last year and you legally paid $0 in income tax. No shady business, no offshore accounts, just a deep understanding of how the system works. This isn't fiction. It's happening every single year and you're paying for it. Now here's the uncomfortable truth. The rich aren't cheating the system. They're using the system better than anyone else. And the rules they play by? They're publicly available to anyone who cares to learn. The only difference is they have the lawyers, the accountants, and most importantly, the mindset. Today we're pulling back the curtain on the wealth strategies of billionaires, CEOs, and ultra-rich families to understand how they legally avoid taxes, while the rest of us struggle to make ends meet. So stick with us, because by the end of this video, you'll never see the tax system the same way again. The game of taxes was never designed for you. Let's rewind. The modern tax system was built in the early 1900s, during a time when 99% of people earned income through wages. But the top 1%, they didn't make their money that way. They owned businesses, they bought assets, and they invested in real estate. The system was built around them, by them. Take Warren Buffett, for example. At one point, his secretary paid a higher tax rate than he did. Buffett himself admitted it. And why? Because she earned a salary and he earned capital gains. That's the first secret. The type of money you earn matters more than how much. The rich focus on capital gains, money made from investments, because it's taxed at a much lower rate than regular income. Segment 2. The loopholes hidden in plain sight. You've probably heard the word loophole thrown around like some magic backdoor trick. But most so-called loopholes are actually part of the tax code itself. Legal, intentional, and designed to encourage certain behaviors. Want people to invest in real estate? Give them depreciation deductions. Want people to create jobs? Give tax breaks to business owners. Want innovation? Reward startups with research credits. That's why someone like Donald Trump, who owned dozens of properties, could legally write off millions in depreciation, even though his properties were making money. The system doesn't reward hard work. It rewards ownership and leverage. Now picture a man named Jeff, a tech entrepreneur who sold his startup for $50 million. Instead of paying taxes on all that money, he rolled it into something called a Qualified Opportunity Zone Fund, a government program that lets you defer or eliminate taxes if you reinvest in specific distressed areas. Legal, encouraged, and invisible to most people. Segment 3. Borrowing instead of selling, the billionaire cash flow hack. Here's something that might blow your mind. The rich don't sell their assets. They borrow against them. Why? Because loans aren't considered income. That means no taxes. Imagine owning $100 million in Tesla stock. You want to buy a $5 million mansion. Instead of selling the stock and paying capital gains taxes, you just borrow $5 million against it at a low interest rate, often under 2%. The stock continues to grow, the loan isn't taxed, and the interest is sometimes tax deductible. This is what's called buy, borrow, die, a wealth strategy used by America's elite. They buy appreciating assets. They borrow against those assets tax-free. And when they die, the assets pass to their heirs with something called a step-up in basis, wiping out the capital gains tax altogether. That's how wealth gets passed on without ever getting taxed. Segment 4. The power of foundations and charitable trusts. Let's talk philanthropy, but not the kind you see in donation boxes. Think about the Gates Foundation or Zuckerberg's Chan initiative. These aren't just feel-good gestures. They're tax strategies. When the rich donate millions to their own foundations, they get a huge tax deduction, retain control over how the money is used, pass on their values, influence, and sometimes even salaries to their family members through the foundation itself. It's legal, it's smart, and it makes them look good while saving them tens of millions in taxes. Here's how it works. Say you donate $10 million to a family foundation. You get a tax deduction today, the money grows tax-free inside the foundation, and you can direct it to causes you care about on your timeline. And because it's technically a charity, you're also creating a legacy your family can manage for generations. Real estate, the ultimate tax haven. Real estate is the wealthy's favorite playground. Not just because of rent and appreciation, but because it comes with some of the most generous tax perks in the world. Every year, real estate investors get to deduct depreciation on their properties, even if the properties are going up in value. This paper loss reduces their taxable income. Add in mortgage interest deductions, 1031 exchanges, which let you roll profits from one property into another tax-free, and suddenly you've got a formula for building tax-free wealth. Look at someone like Grant Cardone or Robert Kiyosaki. Their wealth isn't just from books or courses, it's from real estate holdings that are leveraged, tax-sheltered, and cash-flowing. Why you're not allowed to win? You might be asking, if all these strategies are legal, why aren't we all doing them? Because they require access, they require information. They require a mindset shift from working for money to making money work for you. The system isn't rigged, it's complex, and complexity protects the powerful. The tax code is over 70,000 pages long. Hidden inside are rewards for those who know how to read it, or who can pay someone to read it for them. That's what the rich do. They hire the best minds to help them play the game better than anyone else. And while we're worried about our next refund, they're building empires that can last for generations. The hard truth is this: if you're working a 9-to-5 job and earning a salary, you're the one funding this system. Every time you get taxed on your income before you even touch it, someone else is earning tax-free gains from assets they never sold. Every time you fill out your W-2, someone is handing their accountant a K-1 and paying half the rate you are. Every time you celebrate a refund, the ultra-rich are celebrating that they legally owe nothing. But knowledge is power, and if you've made it this far, you're not just another statistic. You're ready to step into the other side of the game. The tax code isn't your enemy, it's a roadmap. It explicitly tells you what the government wants you to do. Invest in businesses, provide housing, create jobs, and fund non-profits. Learn it, leverage it, use it to your advantage. Because the moment you stop trading time for money and start thinking like an investor is the moment the tax system starts working for you, not against you. If you want more in-depth breakdowns like this, subscribe to EiQS and join the movement. We decode money, power, and strategy so you can level up your life and future. Turn on the bell and don't miss what's coming next. You deserve to play the game like the rich. Now you know how.